Okay, let's talk about what I did Thursday, what I was looking at. So Thursday on the daily chart, I wrote that today closed lower after making a new high above last week's high, and there seems to be a reversal at play with price moving lower. So with how far above this previous week high price went, and then how quickly it ran back beneath it, creating a down close candle, this does appear like a reversal. Um, Now let's go down, go and drop down. Oh no, also had took previous day high and low. That's also looking at the economic calendar for this week, where most in red folder news, it does come after FOMC minutes and you have unemployment claims and the GDP and everything. So most of the volatility was probably kept for the end of the day, the end of the week, and that's apparent by how Thursday moved. Thing is, though, price didn't really do anything that caught my attention for a trade setup, except for in London. So I'm going to talk about London. I'm going to focus about what the London session did in Europe. Um, and less about the New York because as you can see, Asia was a little bit boring from the earnings, whatever left over, the spillover from the earnings report drove price higher, consolidated a little bit until Europe opened. It was manipulation higher to form a new high of the day, and then we started to move lower, and then New York simply barely retraced. Usually I would have liked to see it retrace. There would have been a trade opportunity if it had retraced, but instead we just get dumped lower. We don't really have much opportunity to go back to a premium and look for reversals as we're retracing higher. Um, and we just kind of get dumped down and the whole day really, and we stay lower. So not the most attractive day for someone who's trading New York Open. I can see how overnight price accumulated orders by moving sideways until around 3 a.m. Interestingly enough, 3 a.m. is when the London market exchange is open, and so we can treat it similarly to the 9:30 New York Open. Um, Note the 9 o'clock hour just dumping down into discount and leaving a large range. This broke the large range rules before being able to give me an opportunity. So what I'm talking about is my range rule, right? Every 3 months I take the average uh, 9 o'clock range, and then right now, last quarter it was 160 points or so. So as soon as I see 160 points, I stop trading. I'm starting to be a bit more loose on it because I'm starting to see more often that we have 160 point ranges. I think it's just because price is becoming more volatile, um, and it's a little hard to maintain, a good, because the whole reason I have that rule in place is in case we're having a trending day where every opportunity that I see the 5 minute short term highs is actually not going to lead to a reversal. And it's just going to keep going in the same direction it goes, whether it's lower or higher. So I have that range rule in place to kind of say, okay, price has moved enough, call it quits for the day. But anyways, yeah, overnight consolidation moving sideways, and bam, right at 3 a.m., very excited price action higher, and then we have displacement, 15-minute fair value gap, resisting price, and we just get shot down lower. Now, that initial on the 5 minute chart, let's just say I use the exact same methodology from 9:30 open, and so 3 a.m. is the London market open, 2 a.m. is the Frankfurt open. So I know a lot of people say 2 a.m. is London open, but it's actually not. It's one of the two Europe opens, and London is the bigger one, I'm pretty sure. So it also opens at 3 a.m., not 2 a.m. But anyways, we have a short-term high here that has a down close candle next, and we have not really too much of a breaker, but still, there is still a short-term high that gets hit, and then price starts to run back down very quickly. And then we have a little bit of sideways price action, a little slower price action before continuing to run down rapidly again. And this is inside that 50-minute fair value gap, which is higher time frame PD array. You can treat it the same as buy side liquidity. So the exact same methodology using up here, you can apply it down here. The only difference is it's at an odd time. So I'm going to ignore this. It's 5 a.m., 6 a.m. So I'm going to ignore this piece of price action. But it's just kind of like the same thing, really. So you have a short-term high taken out here, and then you start going on 1 minute, look for shorts, and then you see the first inverse fair value gaps. They don't the last one doesn't get reversed. So I wouldn't be taking anything up here, any order blocks or fair value gaps or other inverse fair value gaps. But then as soon as we create this new range and we've inversed all the fair value gaps, you would trade back into here, into that fair value gap, and then that's something I could take and just kind of hold throughout the morning to kind of clear that low or that sell side liquidity. Target that I had down here even is something I could hold for. But this is already plenty. It's like what, four? Wait, what is this? I don't know, but it's 20-point stop loss. It's about like almost 5 risk to reward. So this is really good, good enough at least. And it would have been worth the wait. But yeah, it's not always that price will move like this during the Europe session. It just so happened um, this time that it did, and I wish I could be able to predict, when the Lund sessions are going to move nicely, when there's going to be volatility or not. I'm sure it has to do with their economic calendar, and what's going on in the UK. Unfortunately, I'm just not that in tune with everything to be able to anticipate when the volatility is going to be present during the Europe sessions. I guess the best way is really just to study it and look at how price action looks ahead of it. But I just don't do that enough. Don't have the time either, and it's impractical for me to be trading at this time anyway. But I'm still going to talk about it in case one day I do, and I want to go back and look at my notes. So, with that being said, um, yeah, this is just a 9:30 open right here. You can see it just kind of opened up and just shot straight down. There was nothing really to do. But with that being said, that's really it for this review, and I hope everyone enjoyed. And good luck next week, and have a great rest of your weekend.